All right, guys, welcome back to another video. The last video I posted was bearish entries, right? So today we're gonna look at bullish entries. It's the same thinking. It's the same thing. There's no difference. You just have to um apply yourself to it and then get to understand it. So the corrections and continuation should always be done on the 15 or 5 minutes time frame. The corrections and the continuations are always going to be done on the 15 minutes or 5 minutes time frames. When it comes to the indication, you're looking to get the indication on the 4 hour time frame or maybe on the 1 hour time frame. What that means is that on the 1 hour time frame, 4 hour time frame, the last candle that's being formed, you're trying to see if that gives you an indication, or whatever candle that is being formed, you're trying to see if that candle will give you an indication, right? So when you get into the market, you mark up your highs and your low. If a high is broken in the bullish indication, in the bullish trend, when the high is broken, that is an indication of what the market wants to do, right? So obviously, you know that anytime you're seeing higher highs and higher lows, that's an indication that the market wants to trend upwards. So once the high is broken, it indicates to you that the market wants to go up, and then it corrects, right? It goes to grab some orders before continuing to move up. So where you want to enter the market, the safe place to enter the market is to get to that level, right? So if it corrects itself to form another higher low without breaking this low, and it begins to go up, what you're trying to do is that you know that anything below this is a sell, right? Because this low went all the way to that level when they sold. So you know that anything below this level is going to sell. So what you're going to do is you're going to wait for it to go above that level, right? That low that was broken to give that indication. You want the market to break that low, this previous high, right? You want that market to break this previous high. And then once this previous high, it gets to that level, when it breaks it, you are trying to enter the market from that level. You're trying to put your entry over there. And then obviously you target this one first, and then you target maybe a 1:2, but then your stop loss all the way at the previous low. But like I said to you guys here, you're trying to mark up on the 4 hour and get to enter in the 5 or 15 minutes time frame, right? So in the 4 hour time frame, you're marking up in the four. Sorry guys, I don't know what just happened over there. So on a 4 hour time frame, you're looking to mark up your highs and your lows, right? And anytime a high is being broken, right? So this high was broken, it created an indication telling us what the market wants to do. And then that indication obviously has to create a correction, right? A higher low is being formed. The minute a higher low is formed without breaking this higher low, you know that okay, correction has been completed, because it begins to what? It begins to form higher highs and higher lows as well. In the case of the bullish corrections, the correction is bearish. So the indication is bullish, the correction is bearish, and the continuation is bullish. So anytime you see something being bearish, meaning that lower lows and lower highs are being formed. So the minute on the continuation, the minute you see higher highs and higher lows being formed, then you know that the correction has been completed, and then you're looking to get into the market. Like I said, if you really want to be safe, the best place to enter the market will be at that level where you know that anything above this level, that previous high that was broken, anything above that is a buy, but anything below that is a sell. So you're not trying to, if you want to be safe, you're just waiting for the market to go back above it, and then right from there, you place your entries, and then obviously target, and obviously you target the previous low as your stop loss, right? So I just did this over here, right? This gives you an indication from there to there, because it breaks. This one gives us an indication, right? It gives us an indication because it breaks this high, and then it corrects itself. Remember, I said in the bullish trend, the correction is going down, so it's bearish, right? And then once it gets back to that level where there are buyers above, you're just going to enter. So your entry is going to come at that level. What is the level? The level that the indication came from, the level that broke that indication, the level where this high broke that indication is what I'm talking about. So this is very simple. We're going to jump into an actual market, and then maybe I'll be able to explain a little bit to you. Let's see this one. Okay, yeah, I think this would be a good example. let's use this as an example. So on a 4 hour time frame, let's see, we're going to consider this level, right? So we're going to consider this part. So when I come into the market, I'm seeing that a high is being formed here, right? I'm seeing this high being formed right now. And then I know that there is a low here as well, because this high came from this low, right? So this is a low that has been formed as well. So that's going to be our high. That's going to be our low. Let's just say, let's just mark here the swing high, swing low. So that's going to be our high. This one is also going to be our low. By the way, these are things that I've made templates of. So if you want to also do the template for yourself, then you can. But it's not something that came with TradingView. I made it myself. So this is a high, this is a low, right? You're looking for the high to be broken or the low to be broken. In the case of a bullish trend, the high was broken. So it gave us an indication of what it wants to do. What was the indication? This was the indication. This was the indication, right? So that's going to be our indication. So this was our indication because this broke that high. This was the previous high, and this went all the way and broke that high, right? So this is being done on the 4 hour time frame, right? So the minute this high is broken, what I need you to do is to go to your 15 minutes time frame, because the 15 minutes time frame will give you a lot of it will give you a clear example of what's happening right now. Let's go back to the 4 hour time frame and mark up that indication very well so that it doesn't confuse anybody at all. Very simple. Just pay attention to it. Watch the video several times if you have to. So we're just going to put a box around, a circle around this one. Yeah. So that was our indication, right? Meaning a higher high was formed at this point. Let's name it higher high. A higher high was formed at that point. So the minute that indication is completed, you want to go to the 15 minutes or the 5 minutes time frame. In this particular example, we're going to use the 15 minutes time frame, right? So this is the indication. This is the indication that we saw. This was our higher high from the 4 hour time frame, right? So that's the indication. And remember, the ICC method is that it's indication, it's correction, and it's continuation, right? Especially if it's going to be a bullish trend. You're looking for that high to be broken. That high was broken at this level. The high was broken at this level, and it went all the way up here. So the correction, which is this part, will be from this level all the way to this part. That will be our correction. Why is it our correction? Because I told you that in the correction, the market goes down, meaning that lower lows and lower highs are being formed, right? So you can tell that this was a lower low. You can tell this was a lower low. This was a lower low. That was a lower high. This was also a lower low. And then this lower low created this lower high, right? This lower low created this lower high. So in this market, you're seeing lower lows and lower highs being formed, right? So it went all the way at this level. It came here, then it went up there. It came here, then it went up there. Then it came all the way down here. Then it went up there. Then it came here. Then it went all the way up here, right? So this is equal lows, right? I mean, equal highs, right? But these are equal. This is a lower high, right? Which is still an indication that the market is going down. But then guess what? It came back here and then it broke that high. It broke this high. So that is an indication, right, of the market wanting to go up, right? So the minute it breaks that high, you know that the correction has been completed. So what you're going to do, you can enter the market over there, and then you go to your 1 hour time frame. When you go into your 1 hour time frame, you can target the previous low. The previous low was this low. And then what you can do, you're going to first target this high, and then you can target that high. And then if you completely target that high, you're doing a 1:4. Do you understand? That's how it is. Bullish corrections and entries are simple, just like the bearish corrections. your indication is being formed. It's completed. Once that is completed, you go to your 15 minutes or your 5 minutes time frame. You look for your corrections and see what time the correction finishes. The minute the correction finishes, higher highs and higher lows are being formed, because now highs lows are not being broken. Because remember what I said, that anytime you are in the bullish trend, the correction is always going to be bearish. So how do you know that the bearish correction has completed? It means that you're going to see higher highs and higher lows are being formed. And once a higher high and a higher low is being formed, you can just enter it from there. But then if you really want to be safe, right? If you really want to be safe without necessarily like doing anything, then I think what I'm going to do in the next video, I'm going to teach you guys market structure in the next video, and then from there, I'll teach you guys the time frame correlations. That all the time frames would have to give you the same indication the 4 hour gave you. So the 4 hour gave you an indication it wants to go up. The 30 minutes would have to give you an indication it wants to go up. The 1 hour will have to give you an indication it wants to go up. The 15 minutes would have to give you an indication it wants to go up. The 5 minutes would have to give you an indication it wants to go up, right? So if we go back and look at A, you will know that at this level, when we got to this level, this high got broken, right? It indicated to us it wants to go up. Do you understand? It indicated to us it wants to go up. So you can enter the trade from here, or you can just wait for it to indicate. And then when it indicates, it can correct itself, and then you can enter the market also from here to target the next highs, right? So it's so simple. You just have to watch the video over and over again if you don't understand it. But yeah, watch it over and over again, and if you don't have any understanding of it, just put it in the Discord. Like I said, I don't charge anybody for anything. I'm not trying to give anybody any signals. I want you guys to be able to understand it and then trade it the way that you want to trade it. But yeah, that's how you find your entries when it comes to the bullish trend. You mark it up on the 4 hour, you go in the 15 minutes and the 5 minutes to see which one is giving you a clear indication of the market completing the corrections. And once the correction is completed, in the case of a bullish trend, it's going to be a bearish trend that is being formed. But once that is being completed, meaning higher highs and higher lows being formed, you just enter the market from there, and then you target the previous highs. And then you just, try and make money off it. So that's it for today, really. I'm just going to leave it here for now. And I'll see you in the next video. Thank you.